September 13, 2023, and this meeting is for our real estate agents. And we'll go through our headlines, we'll go through some what's on the news, and we'll definitely go through some systems that we are using that will help you guys on daily basis. Okay, so let's get started. Let's get started with the interest rates first. So we are seeing above 7% for past couple of weeks now, and that is still the trend. We see on the lower end of by maybe 7.1, but then on the high end maybe 7.4. We're seeing it in the range of sevens. So if your client is asking you what are the interest rates these days, you can tell them they're hovering around 7%. As of yesterday, they were around 7.29. This morning, they dropped 0.05%. So these are your national averages for your conventional. If your client is going with the FHA, might get a little bit lower compared to your conventional. Okay, but again around 7%. And when you see this here, that your monthly payment is $3,400, that is just giving you example for a $500,000 loan at 7% or 7.25%, but it only includes your principal and your interest. If the person is purchasing a house in Long Island, they know that the taxes are is going to be around $12,000, which is around $1,000 per month. So you can add that here. But when you see this amount here, this only principal and your interest. Okay. On a negative note here for your inflation is where the government is keeping track of on monthly basis, and the last month was not superb. You can see that US inflation rate actually went up now. The prior month was 3.10 or 3.18, and it jumped to 3.67. When the inflation is trending upwards, the government, the Fed, they will keep increasing these interest rates so the inflation can come down, right? We saw that the best news that we heard was around July. Since July, we really thought that inflation was coming down, and it did. And then after that, it started trending upwards. The Fed does not want to see this. If it hits 4% in the next month or so, forget about thinking of, hey, the interest rates will drop anytime soon. They will not. So Fed is right that they're going to keep track of this on monthly basis and make sure that the inflation is coming down. Their target rate is 2%. Okay, they're at 2%. That's their goal. But will they achieve it this year? We highly doubt it. Hopefully next year, that's what they're going for. So, but definitely it went up from prior month. Okay. And here's some news on our mortgage side and our real estate side that the mortgage activity suffered. When you see a headline like this, read through your entire article, and you might see, hey, it was down 1.5%. Is 1.5% a lot? It really depends on how you look at the stats. But just don't look at the overall market. It is, people are scared because the interest rates are 7%, and people have the right to, hey, if the mortgage was going to be $3,000 and all of a sudden it's $3,800, it's $800 more every month, it will hurt them in some way or another. Some people straight up feel like it's just not the best time to purchase right now, and we respect that. It's perfectly fine. Will they regret it? Only time will tell. We have clients that were waiting since COVID time. Hey, the market is going to crash, the price is going to come down, I'm going to wait another year. Those same clients are still suffering, because they couldn't find that property that they wanted. On the other hand, your homeowners, again, they don't want to sell because they have low interest rates. They rather renovate. And according to a new survey, 68% of the homeowners already started or completed their home improvement project. Maybe they just want to update their kitchen or their garage or their basement and then still live there for a couple of more years, right? And then 63% of them have plans to begin the new renovation next year. So you have more than half of these homeowners already renovating their place. Obviously, every time they do a renovation, it brings their value up. So that's another good thing. And they can live there for maybe in next 2 to 3 years. Okay. And when you're having these conversations with your homeowners, since you are guys are joining these meetings, you are guys getting get educated with the latest stuff. Why not have these conversations with your homeowners? Like, hey, I understand, you were locked in at a low interest rate. I know might be doing thinking about doing renovations. A lot of them are, half of the homeowners are planning to do that. If you're planning to do that, that's perfectly fine. But whenever you're ready to sell, let me know and I can help you on that note. Okay. And then the home prices. Why, your clients will ask you why the home prices are not coming down when the interest rates are outrageous. Just, you can just tell them low inventory. There's just not enough houses out there. Whatever is on the market still sells it fairly quickly, and there's enough buyers for that property. Okay, because there's just not a lot of inventory out there. And we see that in July, that the home prices growth rebounded in July just because of low inventory. Okay, will the market crash? We highly doubt it because of low inventory. The homeowners will not sell anytime soon because they're locked in at a low interest rate. These are the common things that you guys should know as realtors, and these are the conversation you want to have with buyers and sellers. Okay. 1 in 5 millennials believe that they will never own a house, right? That's the new gen. They just feel like, it's just too expensive. They're not educated. So maybe you can teach them about new programs. There's different FHA programs, conventional programs out there. There's assistant programs for down payment, closing costs. There's plenty going on that you guys have the resources for, right? A realtor can really guide these people because they have no idea how to purchase a house, right? They just feel like there might be too much responsibility, which it does have its responsibilities, but your job is to educate them, right? We will be doing first time home buyer seminar here in our office every Saturday at 11 o'clock. I'll be hosting it even if one person shows up. And depending, after a couple of months or so, once they start growing, we start seeing people come in. We expect our realtors and our loan officers to come in and be that guide. I can get the ball rolling. I can get have the presentation, but after that, you guys can come in and put in your 2 cents and try to help those clients. Okay, the job of ours is to educate when we know the way the market is right now. Okay. Another thing is that almost half of the homeowners under 30 got help from their family money, right? So there are programs, especially FHA, right? FHA program will allow borrowers to get gift funds, right? They can get gift funds from their family members, and they can use that for down payment and closing costs. There's some conventional loans out there that will allow the gift funds. They might have some limits or not, but FHA loans let you do the whole entire transaction with someone else's money, as long as they're providing a gift letter confirming that the funds are true gifts and are not a loan. As long as you don't have to repay that back to that person, it's going to be a gift. Okay. So this can be a great helping hand, just like how we said, before, not everybody's ready to purchase or they don't have enough down payment. If they can get gifts from family member, we sure can use that. Okay. All right, guys, that was your news from last week. So now let's look at some stats. So when we're looking at owner-occupied real estate assets, these are the properties. These are the homes, that the red line that you see here. These are your properties, right? And then on the bottom, these are your liabilities. So these are your mortgages. So you can see that as a American owner occupied property will have, majority of time, will have enough assets built where the liabilities are less. Meaning, let's say the property is worth $500,000, but your loan amount is $200,000. You still have enough equity. The way you sell that property, you'll still make profit. The word equity, you guys should know exactly what it is. It's going to be your net profit. Exactly after this, whatever your sale price is, after paying off all the expenses, what are you truly taking home? That's going to be your equity. So you can see that here overall, from going back from 20 years, from 2003 to 2023, that your assets a lot more than your liabilities, and that's what we want to see. Okay. And your equity part, that 71% of these are owner equity share, which is a lot, which is a good thing. That means not everybody owes a full amount of mortgage out there, right? When you're initially purchasing your property, you probably putting down 3%, 5%, 15%, 20%, really depending on your savings. But over time, overall, as American overall, stats, you're looking at most of these homeowners have enough equity in there, and the share is around 71%. Okay, so is owning a property in the long run a good deal? Definitely yes. Okay. So last week, we had an agent or two ask about assumable loans, right? So we want to tell you guys, if your client tells you, "Hey, I know the market is, at 7%. I want to get an assumable loan." Um, you guys should know what it is and how does that work, right? So let's say you have a seller now, right? The seller has a loan that's at 3%. He refinanced it or she refinanced it around COVID time, and they have at 3%, right? Now the homeowners, that's the new buyer that you have, might want to purchase that property, and he's going to get today's rate, which is at 7%. So he's trying to say, no, instead of paying 7%, could I get his loan? I know whatever he owes, I'll pay that. On top of that, I'll pay the market price, but I just want to be locked in at his interest rate, but not the new interest rate that's today, right? These assumable loans are a mortgage that allows a buyer to take over the existing mortgage of a seller when purchasing a house, right? So you're purchasing the house, you're getting that mortgage. So let's say you want to purchase a house for $500,000. You have that person, the seller already has a mortgage for $300,000. You're gonna purchase it for 500,000. You're gonna get that $300,000 loan from that same bank that they had before. You're just going to continue those payments, and obviously he's going to take $300,000 on top of that. Okay, so they're trying to purchase that property, get that same loan. Why? Because of that interest rate. No other reason, just that interest rate is super low. Not all loans are assumable loans. FHA, VA loans, they are assumable, but some lenders may have overlays and might say, hey, these are not assumable, right? So let's go through a couple of those things. A buyer assumes that the responsibility for the remaining balance and the terms of the seller's mortgage, including the interest rate and the repayment schedule. Okay, if the balance is, like we said, $300,000, you include that in your offer. Hey, we're gonna take that mortgage instead of getting a mortgage from a third party, another at 7%. You just want to get that 3%. And how about how you're going to transfer that? The mortgage can be transferred from the seller to the buyer without the need to obtain a new mortgage loan. Obviously, the buyer is not going to get two loans, right? They just want that same loan that they initially getting from them. This can save time and money as the buyer doesn't need to go through a traditional mortgage application and the approval process. The biggest thing is your interest rates. One of the potential advantages of assumable loan is that the buyer may inherit a lower interest rate rather than currently available in the market. Right now is at 7. If he has a 3, your buyer will love that 3%. Okay. How about your lender approval? The buyer typically needs to be qualified for this assumption by meeting the lender's credit, right? So now the new buyers coming in, they want to make sure that that new buyer qualifies based on their income, based on their credit score. So the new buyer has to be qualified for that same mortgage. The lender will review their credit history, income, financial, make sure that they are able to pay that back. Okay. And then your loan might be assumable, but if it has a clause due on sale, it's just a paragraph. It's important to know that not all mortgages are assumable. Mortgages with due on sale, which is majority of these loans, clause will require you to pay the full loan balance to be paid off when the property changes ownership, right? So you're basically going from one seller to another. You need to change ownership. They said no, whatever the loan about balance is, you have to pay that back. Okay. So assumable loans are hard to find, right? Not every seller will allow that. Not every seller will have these assumable loans. But when you hear the word assumable, that is the whole concept. Just you want to resume the payments and receive the same interest rate from the previous transaction. Okay. Any questions on that, guys? Yes. Yes, Charlie. Yep. Can you hear me? Yes, Charlie. I can hear you. Can you hear me? Well, for the mortgage side, whatever, first we have to know what is the agreed price, right? So let's say the agreed price is $500,000, keeping it simple. The buyer, right? The buyer eventually has to pay that full $500,000. Either they have some money saved up that was going to be part of his down payment, and he's going to get um, that mortgage that the previous owner has, right? And the previous owner is going to get rid of that mortgage. Maybe let's say it was $300,000. He's still the seller. He's still going to get that $200,000 from the buyer. So when it comes to the price, it's still going to be the market price. It's just the mortgage amount, the loan amount. Instead of getting a $300,000 mortgage from a different company at 7%, you trying to get that same $300,000 mortgage, the amount will be the same, but your mortgage payment will be lower because the interest rate is a lot lower. He was locked in at 3%. You're trying to get it at 7%. It will be a huge difference in your mortgage payment. Okay, both parties will still pay the price. Nobody's getting a discounted price. If someone was losing in this transaction, no, this will not be possible. It's just transferring from one loan to another. Most banks out there will simply say, no, we will not allow this. Let's pay off this balance. You're going to get a new mortgage with new loan terms and all that. Banks will love that because they're going to get, paid higher amount of the interest rate. So yeah, the point of this was that if one person asked this question, there's a good chance that someone else will ask you guys the same questions down the line. If one of your clients mentions these assumable loans, mention the following things that we just mentioned here with you guys. Okay. All right, guys. Next, as realtors, we should know some of the common siding material that is used, right, for a property. When you see a single family, when you see a two family, majority of these, exterior wall material that's used. This was in stats for 2022. 28%, which was the highest, was stucco, and then 26% was your vinyl sidings. Right, these are the two most common ones, and you guys can look at the pictures here. This is what the vinyls look like, and this is what stucco looks like. Okay. And then you have your concrete, you have your brick, you have other, fiber cement. All the other ones are lower, but majority of them, even in Long Island and Queens, we see a lot of these. We do have new properties that's being built. Some of them they do want to use brick. Obviously the value does increase when you have a property that's all brick. Okay. But at the same time, when these investors, when they're building these properties, they're trying to put their cost as low as possible, so stucco and vinyl are a cheaper option compared to brick. Okay, so this is one of another, all these slides that we're giving, providing to you guys. This is because one of these our agents asked these questions in previous week, so we want to educate everyone else. Okay. Next is we're going to talk about is flipping. You guys should know as soon as as every realtor should know what the word flip means. That you're flipping a property. What does that mean? Is that you're buying a property? Is easy three steps. That you're buying a property that needs renovation. You don't want to flip a house that's brand new. It's already built. What? How are you going to improve it? So you want to look for a property that needs renovations, right? So most of these investors, when you're talking to them, they will say, "Hey, I'm looking to flip a house." You should say, hey, great, I'm going to find you a property that needs a lot of work and you can renovate that. So number two, step two is going to be that he's going to renovate this a property, and then within a couple of months he wants to sell that property for a profit. Okay, so these are your steps. You want to buy a property that needs work, you're going to renovate it, and you're going to sell it for a profit, right? So what the profit should look like. So first is going to be the cost for the investor. So your goal should be that if you speak with the investor and they're looking for a single family, they just want to do a quick flip, right? There are some investors out there, they will take a single family, and if the zoning is right, they'll convert it into a two family. That might be, even a better bet for them. But I want to teach you guys how we're going to get started with the single family, just renovating a single family, and how they can make money out of that. So you as a realtor, when you're looking at properties on KV Core, and you come across a property that's 300,000, 400,000, and you might think, hey, in this area most of these properties are $600,000, why is this property at $400,000? You want to take a look at it and see if it's a good option to flip, right? If it is, then you want to tell your clients that you have in your list, these are your investors, hey, we have a new property that's a good flip. Do you want to take a look at it, right? And his question is going to be, hey, what is going to be my cost? What do you think my cost is going to be? So you want to give them this breakdown. Hey, let's say you purchased it for $400,000. Initially, when you're purchasing it, you're gonna have, going to go through some closing costs, which is around $25,000. The good percentage amount, whatever the sale price is, do 3 to 5% closing cost. Okay. So he's buying this property, he's going to cost him maybe $25,000 for his closing cost. Then once he gets that property, he needs to repair it, right? This gets really tricky. Some investors will think that, hey, the property will cost $50,000 to renovate. Some will say, hey, it will cost $80,000. Some will say $100,000. It really depends on the contractor that they're using and the type of material they're going to be using. So this cost right here is going to be, vary from person to person. So you should tell them, hey, I will tell you that to my knowledge that it might need maybe $50,000 work, but you should have your contractor come in, take a look at it, right? So once you guys add these costs, your total cost right now is going to be 475. So it's costing him $475,000 to buy the property, right, and then renovate it. Yes, sir, go ahead. If it's all cash, just the title is gonna just whatever's in the title. You want to say any purchase, right? Or anybody selling a house or buying a house, the total cost, right? The additional cost they're now aware of 3 to 5%. It might be, small cost as attorney's fees of $1,000 or $1,500. It could be the title report. It could be the insurance. Just tell them, hey, because you guys don't want your client to be surprised. Hey, Hassan, you didn't tell me this. You didn't tell me that. So our job is to tell them beforehand, hey, it's not gonna be like if it's all cash that he's paying nothing. If you say I'm gonna add zero, then it's gonna be a problem as well. 3 to 5% of his closing cost expenses, right? Yeah, just basic 3%. Yeah, even if it's cash, just maybe you can go with 2%, but there's no harm in going with 3% when he actually does it. Whatever saving is on the closing cost that you quoted, he's gonna be happy. He's like, hey, you told me it's gonna be 3%, but mine is 2%. I'm saving $5,000. That's good news for him, you know? Yep. So no, I mean, I would not even use those. I mean, anything that's built in, something like that, would not have accurate repair cost. The best thing to do is you just showing the property, and then that investor, if they like the property, getting at least two or three different quotes from different contractors, right? Licensed contractors, and they can tell them, hey, it's going to cost them this, this, and between those three quotes, they can compare it, right? When I used to do it, I used to be like, "Hey, this is the property. This is what I think. It needs a lot of work. You tell me how much cost is going to be." Once he gets that quote, two or three different quotes, we usually go with the middle one or the lowest one, and we add that, and then say, "Hey, does these numbers make sense?" If the numbers make sense, then we actually put in the offer and move forward. Okay. No, I can create one for you guys if you guys want a spreadsheet for investors. So I'll put it in my list. No promises anytime soon. Just that schedule is kind of tight, but I'll try to get it done for you guys. Sheet for investor. Okay, that's not a bad idea. Okay. A basis point, they're referring to what? The interest rate? Those are your basis points. When we say 6.99 and they're going from 6.99 to 6.8, those are every point is a basis point. Um, what are they referring to? How you gonna get paid as a realtor? You should have nothing to do with basis points. It should be the purchase price and your percentage that you're gonna be making off that purchase price. No, that's like if they're buying down, if they want to buy down the interest rate, they have to pay a discount points. Those are going to be your, cost. When you say discount point, it's just going to be cost to buy down the interest rate. But I would not, like I said, as a realtor, I mean, if you were a loan officer, I would have more in-depth conversation with you with that. But for as a realtor, we should not be involved with any investors with the basis points or anything. He should have that conversation with his loan officer. But you, when it comes to your commission, it should be a percentage of your purchase price. All right. Yep. But these investors, when you're if you buying them a property, right, and they're renovating it, they want to flip in next 2 months or so, you should stay in touch with them all the way because when they're ready to sell that property or list it on the market, you're the one who found the property. You should have the first right to pick up that property and list it. So you should be able to make double the commission on that note. Before you're representing him as a buyer's agent, now you're going to be representing him as a seller's agent. Okay. So next, we're not done yet with his cost. We want to know how much he's going to actually make, right? So let's say the property is going to value it around $600,000, and you want to list it for 599 after full renovations, right? So once he wants to list it for 599, we have our seller's breakdown, and that again is going to be 3 to 5% of his closing cost. When you are a seller, you main biggest expense you have is your transfer tax and your realtor's commission, right? So let's say it's between 3 and 5% total. That's your another $25,000. So you remove that 599 minus 25,000, you're left with 575. So you take 575. That's the minus the original deal cost that it was 475 to buy the property, renovate it, and now he has $100,000 profit. Okay, how realistic is this? Example that we gave, it is very realistic, right? It really depends on you, what type of property you find for your client. Even if, yes, sir. Sure. This one? Yeah. Right. Yeah. We'll definitely around 4 o'clock, we'll share all these slides with you guys. So the original cost was, $400,000, $25,000 closing cost, $50,000 for repair. It cost him 475 to get that property ready. After a month or two, he wants to sell that property for 599, and after his transfer tax, realtor's commission, he's left with 575. His original cost was 475. He's getting 575 at the closing. He's making $100,000. Okay, even if you cannot get your investor $100,000 profit on paper, you still can do a good flip even if they're making $50,000. We have investors that can make 60,000, 70,000. They're super happy. $100,000 should be your goal. Hey, every property that I'm looking at, I want to be able to have $100,000 profit in that. The way the market is, the way the investors are, they do shrink because you have competition, right? People will say, hey, instead of purchasing it for $400,000, I'm gonna get it for 420. Or another investor might say, hey, fine, I'll take 425. So every time they're going up with this price, they're eating up their own profit. Okay, because end of the day, we have to be realistic. When we're reselling it, the market will speak. If you guys put it for 599 and the market says, hey, no, we the highest offer we got was 575, guess what, your property is worth around 575 instead of 599. Okay. Sure. Yeah. Yeah. 3%, yeah, minimum 3, between 3 and 5%. right? And what does that, yeah, if it's a Long Island client, yeah. So if it's a Long Island client, what is his transfer tax? 0.4%. If that client is in Queens, his tax is going to be 1.825%. Huge difference. So that's why you want to give them a range. Hey, let's go with 3% on the low end, high percent, 5% on the high end, right? Okay. So again, the goal should be that you want to give them maximum profit. This is a brand new listing that I saw yesterday. So hopefully you guys can show these property too, and is a perfect example of what we are talking about. The property is vacant. The property needs a lot of work. Your job should be, hey, the property is available, and you have investors in your list. You want to show those property to your investors, right? So this is the property's details here. You can see the MLS number here, and it's listed for 349. Will it go for 349? I highly doubt it. It's going to go higher than 349. You guys can keep an eye on this MLS and see if you guys are brand new and see actually what it sells for in the next coming weeks, and then see how, and if you guys keep an eye on it for next couple of months, this property will get flipped. Okay. So this is going to be a good example for you guys to keep track of. It might take months to see this finish, but this is going to be a good example. Okay. It's 3 bedrooms, 2 bathrooms, listed for 349, 50 by 100 lot size, about 1,300 square feet built. So it has all the specs for a good flip. The taxes are below $10,000. So everything is positive about this flip. Now, what type of work it needs really depends. You can see that from the photos. So you should go take a look at the property yourself. Then you should take your investors with you and just show the same property. Okay. That's how you guys are gonna do flips, guys. Any questions on that? I mean, it's hard to secure that. I mean, when the offer time comes, they will sign it. But if you feel like, if you have that gut feeling, hey, person, is not keeping in track with me, or if he's going with other realtors, then you can tell them, hey, I have a great investment property. I want to show you, but I have seen that with our, other clients where they leave or they go directly with the sellers, listing agent. I just want you to sign this document so I can show you a good flip. If you don't like it, if you don't like, I'm putting any offer, you're not required to work with me. But for this particular property, I want to show you is a good investment, but I just need you to sign these disclosures before I show you. And I'm sure if there's a good flip, they will sign those documents. Just the agency disclosure, yeah. Just the agency disclosure that you're representing them. That's all. Correct. You're just telling them, hey, for this property. So let's say that person does want to make an offer, then you would go with it. I mean, when it comes to loyalty, just in general, when it comes to buyers' loyalty, is just not there. We have seen a case over case, month over month. Hey, I've been showing many properties. I have these disclosures signed, and this person is still under contract with another agent. Again, when it comes to loyalty, they're just not there. You do want to do your part, like, hey, these are the disclosures, these I represent you, so I want to show you this property, please sign these. Again, if they still go out of your hand, it's just not much we can do. Okay. Yep. All right, guys. Next, let's talk about your privacy and your client's privacy, right? You're a realtor, right? You're showing properties, but not everyone wants to tell their family and friends about their business, right? They're purchasing a house, they might be renting before, now they want to purchase a property, but they don't want to disclose that to anyone else, right? So you want to keep that to yourself. You might have the case over case, especially our loan officers, where you should keep your privacy at 100%, like to your client, like, hey, I just can't disclose any of their information to anyone. That is the law. That is what you want to follow, right? Same thing goes for the realtors. Just keep it to yourself, right? If you're talking to a friend and you want to give, you want to brag, you're like, "Hey, I closed the deal." Instead of saying, "Hey, friend, I helped Kelvin purchase a house," You can say, hey friend, I helped a client purchase a house that was 3 bedrooms, 2 bathrooms in, Queens, South Ocean Park. The lot size was 40 by 100. But just don't disclose your client's information, right? Their name, their information, none of that. You just want to keep it very professional, right? When you keep it professional, you keep it to yourself, it goes a long way. Your client will judge you based on that. On a negative note, if you are, telling everyone, hey, Kelvin bought this house, Kelvin bought that house, and they don't want to, I mean, it's going to look down upon you. So you want to make sure that you're keeping all these secrets to yourself, all these files to yourself. Some of these our realtors closing deals don't want us to create canvas. They just don't want us to do for sale, for sold signs, or just sold, or any of this, just because of their privacy, and we respect that. Some of them say, hey, nobody needs to know how much money I'm making as a realtor. Perfectly fine. Or how many closings I'm doing. Perfectly fine. And we respect that. And we want you to do the same thing for your clients. You close a deal, you hush hush, you don't need to mention that to anyone. Okay. So privacy, very important. Keep it to yourself, please. Okay. All right, guys. Next topic is your KV Core. Some of you guys are complaining about the phone apps, and I personally have issues with the mobile app for KV Core. What I recommend that you guys log in through a browser. It could be a laptop, it could be a computer. As long as you have a Google Chrome account, we have set up for every one of you guys. KV Core, you want to spend 20 minutes, 30 minutes, half an hour, right, on your KV Core database in the morning. You want to do it from your laptop. You don't want to do it from your phone, because the app is just not it. It just doesn't have that it factor that you want to spend so much time. But on the browser, it's diamonds. It's everything's great on it. Like, even when you're setting up alerts, you're following up, text messages, listings, everything that you're doing online, web based, it's magical. I don't think there's anything better software out there than KV Core when it comes to you want to follow up with your clients. But just do it from your browser. Okay. Spam again, we are seeing reset messages. When you see something like this, please do not click on any links. If your password is expired when you're logging in, it will tell you to change, but we never had that case. So please, any emails that you guys see here, just keep an eye on it before you click on any of the links inside. Okay. If your email signatures are not set up yet, please come in, and our assistant Sukman can help you set those up in 5 minutes. Okay. Your business cards. Everyone should carry their business cards all the time. If not, have your digital business card. We have, app that we use, Hi Hello, and this was thanks to Joseph for recommending that a couple of months back. And now I see a lot of these agents using it, but we want everybody to have it. It's a free app. Why not have your information? So this way you will have a QR code, and you just display that to your client. They're right there. They're scanning it. They have all the information saved in your phone, on their phone. They don't even have to type your phone number. So it's even better than a physical card. If you carry your physical card, great, but have this option as well. Okay, there's no harm in having both of them. Okay. This was another app here, photofy.com/NAR, right? We're part of NAR here. So if you use them, this is a free app. You can download it on your Android and your iPhones, right? And this way it will have all your information, right? With all the disclaimers, and it's powered by the realtors, right? So it will have everything that you need. So just download it, use a couple of photos. So once you upload those, you can share those photos on social media. It looks really professional. So hopefully some of you guys can try that. So you want to mix it up. You want to use your Canva for designing, that's great, but you want to use different apps so you can diversify your portfolio. Okay. Your QR code, this for digital card. Yeah, digital card, when you create it, right? Once you download Hi Hello app, and you're gonna sign up, it's gonna ask for your photo, it's gonna ask for your information. So you can probably do it for your different professions that you're doing, and it will say view QR code. And when you click on it, a QR code comes up on your screen, and your client is opening up their camera and scanning that QR code. No, 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 not an LG agent. No, this website or this app will create it for you. Okay. All right. Yeah, Shirley, you asked how do you find properties for investors? Again, on KV Core, you want to have their budget set up, $50,000 less, $50,000 more, and then you go from there. Just like finding any other properties. We can do a private session on that. We're going to be running out of time soon. Right, we do have new agents that are signing up that need safety training. They want to make sure that they're safe when they're showing the properties. So NAR, they actually have a website, nar.realtor/safety. So this will, you can keep track of it. Hey, how I'm going to stay safe. They give you good guidelines. So please follow that and go to their website. And just remember, guys, showings equals closing. If you're not showing as a realtor, if you're not showing, you're not going to be closing. Right? Find a way that, hey, I need enough clients. You have Opcity, you have Zillow, you have your Sphere, you have your system in KV Core, you have options to find these properties, and your job is to schedule showing. There's no point of looking at all these new properties in South Ozone Park where you don't have any clients showing in that area, and then the following month it's the same thing, and the third month it's the same thing. You want to actually first find out what's on that market and then find clients in that market, right? If you're not showing on weekly basis, it's going to be hard to achieve your goals as a realtor. Okay. So next, I want to review your internet, right? Some of these guys saying, hey, I have hard time. I love dot loop. Why are we making the change? Could you go in more details for transaction desk? So I'm going to show you guys. This is going to take literally 5 minutes or less. So let's say you show them the property, you want to fill out an offer, right? So first, how do we access this? You're already going to go to your Stratus. Once you're in your Stratus here, you're logged in, you're going to click on resources instanet. Okay, once you click there, it will take you to your transaction desk. This is the number one step. This is how you actually get here. If you don't know how to get here, it's going to be a problem, right? So you have a brand new transaction, you have a transaction, you're going to click on create transaction. You want to name it, right? So let's say Kobe Bryant wants to buy a house. He's a buyer. And let's say Carlene, you're going to be the listing agent. Okay. So for templates, we switch this around a little bit to make it easier for you. So we have template A, this is for the seller. If you're representing the seller, you have B for buyer, C for tenant, D for landlord, right? So what are you using? I'm going to be using buyer. I'm clicking on create. This is exactly what we did in dot loop. Now you have your details. You have 5 steps. There's a lot to fill out here. Should I fill out anything? Nope. I'm going to fill out nothing here, right? So details, clicking on next. Detailed transactions, I'm filling out nothing here. Okay. Your number 3 is your contacts. This is where your step, this is the important step. This is where you want to add your clients. You want to add their name and email address, nothing else. How are you going to add it? You're going to click on add a new transaction. Who is this person? He's a buyer. What's his name? His name is Kobe. What's his last name? Bryant. What's his email? I'm gonna use mine here, so I'm gonna test you guys. I'm gonna test it out for you guys. So I have their name and email, and I'm gonna click on save. So you can see Kobe B right here, right? So we have the contact. We're gonna click on next. Now, because you already selected this as a buyer's transaction, it already giving you these 3 forms. Okay, we have our agency disclosure and we have our offer letter, which is your sales agreement. Okay, if you want to add any other forms, you can, but you don't have to. These are the only forms that you need to submit your offer. We're going to click on next. We have documents. If you want to add pre-approval letter or any of that sort, you can. Otherwise, you don't have to. And you're going to click on done. Now you're in the transaction. Okay, you can see their name if you want to make any changes, and the status is open. Now, first, I want him to sign our agency disclosure. Sorry, hit back. So under forms here, I'm going to click on agency disclosure. So this form here is going to have my name already because I'm logged in. It's going to have the company name, and we're representing the buyer and buyer's agent. And who are they? Is going to be Kobe Bryant. Who's Kobe Bryant? He's the buyer. Where is he going to sign here? I'm going to show you how you're going to assign this part for him to sign. Right now, all you're doing is just filling out, right? Once you have filled this out, now you want him to sign here. You're going to click on this pen where it says send to new authentic sign. You're going to click on that. Now you have this form here that you filled out. All the information that you filled out is already there. Now, what you want to pay attention to is your right side here. This is your signers, your docs, your tools, everything is on the right side. You simply want him to sign right here. How are we going to do that? We're going to add participant. Who are you going to add? Yourself, new, from transaction, from contact. So let's say from transaction, I have Kobe B here. I'm going to select him and click on select. Okay. He's going to sign right here. It automatically came up here. So, but I'm going to delete it and show you guys how you manually add it. You can go to tools, and then you can drag this sign here and bring it right here. Let's say you want to do on the bottom here. Once you click on it, then you can say assign to Kobe B or anyone else you see from the list. Okay. Now you have assigned it. Now you want to send it. Once you're ready, you're going to click on next here. It says finalize signing setup. You don't have to change anything. Just click on send. Okay. Now it took you to the signing page. It's saying that, hey, we send these documents is not signed yet. So now let's take a look at what the Kobe Bryant's email will look like. Okay. So it will say your signature is requested. Kobe B with the transaction ID has Carlene's name on it, and this is the agency disclosure. All he has to do is click on start signing. So I'm going to open up in incognito. This is what it will look like on his screen. It says I accept. This way he has to sign. He can click on start or click on sign here. You're almost done. Complete signing. That's it. It says congrats, you're done. So once he's done with this, we're going to go back to our transaction. Now you can see it automatically changed to completed, and you have that file. Okay. So once you're in here, once you click on it, you can click on this is going to be viewed signed PDF. That's what you want, right? For your record. So you click on it. And now you have your agency disclosure that's signed by him. And you can put that in your notes or in your CRM. Okay. So now this was your agency disclosure. How how do I find our forms that we had for the offer letter? On the right side here, you see forms. You can click on forms. Okay. Now we want him to fill out our offer sheet. So we're going to click on the offer sheet. So this is your sales agreement. Okay. So first, we said we are going to use this offer letter for all our future transactions. So first, you have your client's name, Kobe B. Just like how our offer letter is, we leave all the seller's side blank because as a buyer's agent, we have no clue who the sellers are at this stage. So you're only putting in purchaser information. So you start with today's date. You have your client's name. If you have multiple, you can put that here. And this is saying that where are they located, right? You put 123 Main Street. So this is where some of you guys got confused, and you have the right to because it has your down payment amount in two different sections, right? They have one which is your purchase price of $500,000. There's one good faith deposit, and there's one is down payment payable on formal contract. We always going to be using number three here. We always going to put zero at good faith deposit. We're not putting any money down when we're submitting the offer. We don't. We want to put it in on the formal contract. So we said if it's a single family, I'm only putting down $10,000 on the contract. Okay. And let's say they're putting down 20% down for this transaction, which is $100,000. Out of that $100,000, they're putting down $10,000 on the contract. They're going to get $400,000 mortgage, and the remaining balance of that 20%, they already put down 10,000 here. They're going to bring in 90,000. At the closing, total is going to be $500,000. Okay. So again, your purchase price 500,000 matches your total price. What is that breakdown? They're putting down 20%, meaning they're going to have a loan amount of $400,000 and then $10,000 on the contract, $90,000 for the remaining of the down payment. This is very similar to what we have on our offer letters. The only difference is that we don't have anything for good faith deposit on when we're submitting the offer, and it should be nothing there. Okay. Some of you guys got confused on this section here, right? Don't have to fill out all the information. It's saying that this sale is subject to and condition upon buyers obtaining a variable or fixed mortgage in the amount of. If you're telling them that they're going to get a $400,000 mortgage, you can put the same amount here. You're telling them that they need to get a mortgage of $400,000. And for years, always just put 30 years. Okay. Then it has your section B. I will leave this blank because you don't know which bank they're going to actually go with. They might have a pre-approval with someone else and they might end up with another bank. It's perfectly fine. You can just put it blank. Leave this blank, leave this blank. I'm going to put blank because we're going to use this as a template later. So that's why I'm putting the words blank in here for you guys. Okay. So some of you, when we are negotiating, right, we are saying, hey, this is going to be left behind as personal property, or this will not. So the simple rule should be, we learned this in our real estate classes too, that anything that's fixed should stay in that property. But when you're negotiating, you are telling them, hey, include this, exclude this, anything that you're excluding, and that's something major included here. So this way, your attorneys will know that, hey, these items are being excluded. Okay. I would leave everything else blank, and I would have Kobe Bryant sign right here, and I would put even attorney's information is not available at this stage is perfectly fine. You're just gonna have him sign, and that's it. So how are we gonna do this? We filled out the offer sheet here. If you just want to print this out, you can click on save as PDF, and this downloaded file here, you guys can see it's in here. But if you want him to sign, how are we gonna do this? Click on this pen, send it for a signature. Right? Once it loads up, we're gonna assign it and send him an email to e-sign. Yes. When we're going through our wizard, it says who are the buyers. I put Kobe Bryant and then I put my email. Okay. So now I want him to sign here. How are we gonna do this? Go to tools. You can click here. If you have the signer here, first add your participant who's gonna sign here. Add from transaction. You have Kobe Bryant here. Select him. You already selected, right? That's your number one is going to be who's signing it. And then you have your tools here. Take this sign here section and bring it wherever you want him to sign. You got it here. Once you're done with this, click on next, and that's it. It says finalize, send. Within a couple of seconds, he'll get the email. Same exact thing what we did with our disclosures. So once you have that, you're going to download them and you're going to send that to your listing agent exactly how you are doing with dot loop. So from dot loop towards and transaction desk, there's not much of a difference once you guys know the hang of it, right? Once you guys know how to actually use it. If you guys want to do private session with me, or if you guys going to go in more in depth, we're going to be doing the same session tomorrow 10:30, between 10 and 10:30, just going over your transaction desk. So do join if you want to go in more details. But over coming month or so, we would want to transition from dot loop to here once you guys are ready. Yeah, 10 o'clock. 10 o'clock, same thing online, and I'll be hosting, and it'll be same exact thing here. All right. All right, guys. We're short on time. I do have other slides and everything, but just short on time. Our next meeting starts soon. Any other questions, concerns before we get going? Yes, sir. Yeah, I mean, I believe I saw that too. I think In Touch or something. Yeah, any of these tools, you guys are paying, seven, $800 per year to MLS. So they're trying to get, more and more tools for you guys. Use them. There's no harm. Test them out. They're already part of your membership. Any emails that you get like that, test them out. There's no problem. Okay. Yeah, yeah. No, no, it's all good. It's all good. Definitely check out the apps that we mentioned here too. Photify, that will help you with your social media. So this is the website. All right, guys. All right. Anything else on your mind? All right, guys. So thank you so much for joining. We had a good, quite a people joining today. So hopefully it was helpful. Any way we can be better, just let us know. We can follow your, anything that you guys have on your mind, and we'll just take it from there. Okay. I'll see you guys next time. Take care, guys. Yep. You too, guys. Take care. You. Yep. Thank you, guys. Take care.